Hi there, you're watching Market Cafe on ET Now with me Shriyanti Singh and Snehi Shah, and over the next 1 hour we'll get you news and updates from within the country as well as across the globe, tell you which stocks you should be watching out for, and also tell you what the brokerages are saying. But first things first, we've got to take a look at the US markets, and Snehi, it does look like S&P 500 is really the one holding on to strength.
Absolutely. S&P 500 I wouldn't say is holding on to strength, even though the higher highs continue for that index. It's been just a 2.7 point uptick coming in on an intraday basis for S&P 500. So not much action happening over there. You have Dow that's taken a cut of almost 0.2%, 75 point cut coming in on the Dow as well. However, what was doing well and continues to outperform the market like we have seen for the last couple of trading sessions, at least on Wall Street, is the Nasdaq, because that is up 0.4% and continues to hold on to gains over the last couple of trading sessions. But if you take a look at what the S&P futures were doing, then flat last night. The broad market index also posted a new record close. So while it's been a new record close coming in for S&P, it's not done all that much on an intraday basis. But nonetheless, like I mentioned, the higher highs continue for that index going ahead. If you take a look at some stock-specific action, you had Salesforce and Focus that climbed 10% after the company posted a good set of numbers that beat estimates. Now, during the session, you have S&P that was flat, Nasdaq added 0.4. Both of these indices have once again closed at a record high, so that momentum continues for both of them. Dow was a laggard, declining nearly 0.2%. Now, the major averages have had a tepid start to December. If you take a look at what this month, the last couple of trading sessions have looked like, compared to the major averages, strong November advance following all of that rally that we saw around the election outcome coming in. However, the rallies are likely to pick up again. This is according to experts coming in on Wall Street. Now, if you take a look at the labor market data, this November payrolls data is due on Friday. In particular, it could shape the rally and decide which way the indices head. Is going to be an important data point to watch out for. And data issued on Tuesday showed that job openings total 7.7 million in October, which topped economists' forecast. So we'll also have to see how the markets react to this. Now, today the traders will review an ADP private payrolls report for November. You also have some other important data coming in, like the Services Purchasing Managers Index, factory orders, durable goods. Lots to watch out for, at least when it comes to the macroeconomic indicators coming in from the US. If you take a look at what's going to be happening on the Fed Reserve front, you have the Fed Chair Jerome Powell. He'll be speaking in New York in a moderated discussion Wednesday afternoon US time. So any commentary coming in before that very important 17th to 18th December Fed meeting that we have is going to be important to watch out for. Any hint on what's going to happen, any hint on the direction that they're going to take, the stance that they are going to adopt, all of this is going to be very key to watch out for in today's trade. On the earnings front, then Dollar Tree, Chewy and Foot Locker are among the companies that will be reporting their earnings on Wall Street. So largely that is what Wall Street is shaping up to be like.
Well, absolutely. And let's also take a quick look at oil prices and gold prices then, because oil prices climbed more than 2% as investors hone in on the outcome of an OPEC Plus meeting later this week. So when you take a look at price movements, Brent crude futures, you're looking at an uptake of $1.7 or 2.5% thereabout, and $73 a barrel is the kind of level that you're looking at least when it comes to Brent. When you take a look at US WTI as well, you're looking at an uptick of just about 2.7% coming in. $69 per barrel is where WTI was also at, but OPEC Plus is likely at its meeting on Thursday to extend its latest round of oil output cuts until the end of the first quarter, and that is something that reports are suggesting, at least at this point. So that is going to be providing additional support for the market. And OPEC Plus, of course, which accounts for about half of the world's oil production, has been looking to gradually unwind production cuts through 2025. So definitely that's the meeting that we're watching out for. Let's also take a quick look at gold prices then, because you did have gold rising modestly after a strong US labor report, while a softer dollar as well as easing treasury yields limited those losses as markets awaited more economic data to gauge the Federal Reserve's rate path. Now, spot gold ticked up just about 0.2%, $2,600 per ounce is the kind of level that you're looking at least for gold. But gold, which does not pay any interest historically, does perform well in low interest rate environments. So any cues coming in from the Federal Reserve this week are really what we're watching out for when it comes to gold, Snehi.
Absolutely, lots to watch out for when it comes to crude and gold, given everything that's been happening globally and macroeconomically as well. With that, let's take a look at all the important events to watch out for in today's trade. Not much expected in terms of data back home, but if you take a look at what's expected globally, the US will be issuing, the Fed will be issuing rather the beige book today. It's going to be an important data point to watch out for. From the Eurozone, you have the S&P Global Eurozone Services PMI as well as PPI data coming out. So the PMI and PPI both are in fact going to be very important to watch out for. From China also, you have the Cakes and Services PMI. Remember, we had the manufacturing PMI a couple of days ago and that looked rather steady. Let's take a look at what the services PMI is going to come out to be like. So that's everything that's going to be happening globally today. If you should focus back home, then in terms of some new news flow or some new launches coming in, you're going to have Hero in focus today because the new Honda Amaze is going to be launched. So watch out for how that stock reacts. In terms of other events, then reports suggest that today may finally be the day that the incumbent Maharashtra government, which is the Mahayuti, may announce who their next chief minister candidate is going to be. So there's going to be some excitement around that announcement for sure. You have Fed Chair Jerome Powell, who's all set to speak, like we told you. You have ECB President Christine Lagarde. She'll also be appearing before the European Parliament Committee. So big day on that front as well. Watch out for any commentary on that note. The OECD will be publishing economic outlook, and Navy Day celebrations will be held in India. So watch out for all of these cues in today's trade.
Well, absolutely, and it's the Federal Reserve commentary that is in focus. Onto some key commentary then from policymakers. Governor Adriana Kugler reiterated her position on progress on inflation, saying that it is still underway. Also noting that the central bank is not going to concern itself from changes under incoming President Donald Trump. She also believes that the current policy is well positioned to tackle uncertainties. Meanwhile, you do also have Federal Reserve San Francisco President Mary Daly, who's added that a rate cut this month is not certain, but it remains on the table for FOMC members. In fact, her comments are in line with other Fed voices who have made clear that they expect the central bank to continue cutting interest rates over the next year, but also stop short of saying that they're committed to making the next reduction later this month. So that's some key commentary like that.
Okay, well, job openings in the US showed a solid uptick in the month of October, while layoffs declined by the most in 1.5 years, suggesting an orderly slowdown in the labor market. Job openings increased 372,000 to 7.7 million. Meanwhile, layoffs declined 169,000. That, remember, is the steepest drop since April last year. Also important to note, the street will be closely eyeing that employment report for November that's due on Friday.
Shifting focus to some stock-specific action, then Salesforce shares saw a healthy uptick on the back of their fiscal third quarter earnings that showed revenue and guidance for the upcoming fourth quarter beat street expectations. When you take a look at revenue in the third quarter, grew 3%. Net income as well was up 25% on a year-on-year basis. Meanwhile, the company also raised the low end of its revenue guidance, expecting a range of $37.8 billion to $38 billion for its fiscal 2025.
Okay, well, and then US automaker Tesla will be in focus because Tesla's sales of China-made electric vehicles fell 4.3% year-on-year to 78,856 in November. Deliveries of China-made Model 3 and Model Y vehicles recorded a 15.5% increase from the previous month. Meanwhile, the Chinese rival BYD hit yet another monthly record high, with passenger vehicle sales up 67.2% year-on-year to 504,000 units last month. But on that note, then let's take a look at what the Asian markets are also doing right now, because you have South Korea that's going to be in focus. That market has opened lower today after a day of political upheaval in South Korea that saw President Yoon Suk-yeol impose and then lift a martial law decree within hours. We'll take you through what Kospi is doing, 0.6% lower, but we'll take you through more details about that as well. Quickly taking a look at what the other Asian indices are doing. You have Japan that's trading lower right now, 0.1% cut. In fact, it's built onto those cuts, 0.3% cut coming in on Japan right now, roughly 150 points downtick coming in. Let's take a look at what Hang Seng and Shanghai are also doing, because they've started the day in the red, but yeah, well, seems like that Korean pressure is actually getting through all of these Asian markets. Hang Seng lower, Shanghai also lower by 0.2%. But on that note, let's keep it with Asia, and political upheaval in South Korea is keeping the stock markets on the edge, nearly 2% cuts a day after President Yoon Suk-yeol imposed and then lifted a martial law decree within hours. The initial announcement immediately impacted the won, slamming it to a 2-year low against the dollar. This has, of course, cemented the currency's unwanted status as the worst performing major Asian currency against the dollar this year, bringing its year-to-date losses to nearly 10%. Now, as per reports, the country's opposition Democratic Party has said that it would begin impeachment proceedings to remove Yoon if he doesn't step down immediately. Yoon's chief of staff and senior secretaries have reportedly offered to resign en masse. And important to note here, other Asian currencies, for instance, the rupee back home is also at a record low, while the Chinese yuan is at a 13-month low, as traders speculate Beijing is allowing it to slide as trade tensions with Washington heat up.
All right, then on that note, we also caught up with Professor Madhav Das, Director of Geopolitics and International Relations and UNESCO Peace Chair at Manipal University, as well as Ajay Bagga, who's a market expert, to get their opinion. Let's go across and listen into what they then had to say.
I'd like to say that this is the age of friendshoring. This is the age of decoupling. And you have to decouple because the world is now split into two blocks, both hostile to each other. And it's only a question of time when a kinetic conflict will break out between the two blocks. Let's be honest about it. It may happen in, I've been predicting 27, 27 as a possibly a critical date in which can happen. I don't know. It could be a few years to and fro, but it could well happen. Obviously, South Korean president has acted under the pressure of knowledge of a terrible imminent threat to South Korea. Now, rather than keep it secret, he needs to convey it to groups of politicians rather than keep it secret. Because I'm sure he's also aware about the purpose of these North Korean soldiers in Russia. Now, I think in a democracy also, even though there are national security issues involved, the greatest security is from your own citizens being well informed. And from that point of view, I do believe the declaration of emergency was a mistake, but it shows the desperation of President Yoon, who is a patriot, let me tell you. And I do not believe that there will be significant issues there. But this is also a lesson to South Korea, to Taiwan. These are vulnerable countries. And it's a lesson to both of them. For heaven's sake, friendshore, decouple, and ideally come to India.
The Korean Exchange has said they will function as normal. The party leader of the president has opposed this on a Facebook post, and the defense minister has called for the military. So we really don't know what is happening right now. It's actually come out of the blue. There have been political wranglings on the budget, and this is a minority government which would not survive a floor test. So overall, it's a very big surprise, and I'm sure the allies of South Korea, from Japan to the US to Europe, are working on the back channels to see how this situation can be diffused. It is.
Okay, that's the word coming in from Ajay Bagga on everything that we're seeing happening in Korea. But on that note, we'll slip into a very short break on this edition of Market Cafe, and more news and updates on the other side when we return.
Welcome back. Thank you so much for staying tuned in. Well, let's get you a look at the exciting lineup that we have for you on the market. At 9:20, then we are going to be in conversation with Mark Matthews, who's the head of investment research at Julius Baer, to decode the trends that he sees shaping up in the market. To get a Motown check at 9:30, then Rakesh Sharma, ED at Bajaj Auto, is also going to be in conversation with us. And at 9:40, then we'll also be decoding the earnings verdict with Sriharsha Majetti, Managing Director and Group Chief Executive Officer, as well as Rahul Bothra, Chief Financial Officer at Swiggy, and to decode whether there are more M&As in the hospital space. Dr. Ashutosh Raghuvanshi, MD and CEO at Fortis Healthcare, is going to be in conversation with us, and to discuss new order wins for Bari Energies, Amit Pethankar, the CEO of the company, will also be in conversation with us at 10 a.m. So that's a power-packed lineup for you right there.
Well, absolutely lots to watch out for in terms of market guests and management commentary, but on that. Hi there, welcome back to Market Cafe. Thanks so much for staying tuned to ET Now. Let's take you to some news coming in from the primary markets then. And the SEBI has ordered Traffic Soul ITS Technologies to refund their IPO proceeds to investors. BSE will oversee the refund process, and my colleague Ankur Mishra is here with more details about the entire debacle that's been going around this IPO and why they have been asked by the regulator to refund their entire IPO proceedings. Ankur, take it away.
Yes, market regulator SEBI has taken a note of ET Now's ongoing campaign on SME IPOs in the interest of retail investors. SEBI has passed an order against Traffic Soul IPO where there were allegations that end use of proceeds was not proper. In fact, an anonymous complaint mentioned that the end use of proceeds was done for a shell company which belonged to Traffic Soul itself. Now, SEBI has ordered that this IPO needs to be cancelled and the money should be refunded to investors in full amount, and this is not just full amount but with interest. BSE needs to facilitate the same, and this should be done within 7 days. Apart from that, SEBI has also found that yes, there was an involvement of management in the same, and they were very much aware about the end use of proceeds. Now, all this happened after this IPO of 45 crore was oversubscribed, and oversubscribed to the tune of rupees 10,000 crore. And after that, when the investigation was done by SEBI, first the IPO was put on hold, and later now it has been ordered that the investors should get money with the full interest, and the same should be facilitated by the exchange itself.
Alright, thanks Ankur for those details. Then we also caught up with Ashwin Parekh, Managing Partner at Ashwin Parekh Advisory Services, about this crackdown on SME IPOs. Let's go across and listen in to what he then had to say about this as well.
See, if I look at the entire IPO process, for example, it's not just the company. There are several other service providers who are associated with the IPO, including the merchant bankers, the auditors who certify, the financials. Then thereafter, let's say the parties who verify, these documents and then submit it to the authority, to SEBI, and to the exchanges for listing. Now, all these intermediaries, they must be really hauled up, to my mind. SEBI must really investigate and find out whether they are doing their sort of, duty, their responsibilities properly or otherwise. Because you have retail investors on hand, over here, their interest to be protected. So I would say it's not just the promoters. I would say everybody associated with the IPO. The merchant bankers, the intermediaries, anybody, including even the chartered accountants who certified, let's say, some of the financials or the disclosures, they must be investigated.
Okay, well, on that note, let's talk about the stock that's going to be hogging all the limelight today, and for all good reason, because on the back of its Q2 earnings that they've reported, that's Swiggy that's going to be in focus. They've reported their Q2 earnings for the first time after being listed, and here's what the earning fine print looks like. Overall, it seems to be a mixed bag coming in for Swiggy, because the food delivery business seems to have done well. However, it's the quick commerce business that has actually given up some mixed and some shaky results. Let me take you through what the overall earnings fine print looks like. If you take a look at the revenue on an overall basis, sequentially that's gone up by 11.8%, coming in at 3,601 crores, largely in line with what we were expecting. If you take a look at the calculated EBITDA loss, however, that's widened on a sequential basis, coming in at 554 crores compared to 544 crores in Q1. So that loss has in fact widened by 1.8%. However, annually on a year-on-year basis, that seems to have reduced. Net loss as well has widened on a sequential basis by 2.4%, coming in at 625.5 crores. So if you take a look at both EBITDA and net loss on a sequential basis, it's a miss versus our estimates. Now let's get into their operational performance segment wise. You have food delivery GOV that's coming at 7,191 crores. It's a 5.6% actual gain coming in sequentially, so good numbers in over there, in line with what we were expecting. Adjusted revenue is coming at 1,808 crores, 4.5% uptick sequentially as well. The food delivery net profit has come in at 122 crores, which is an uptick of 81% sequentially. Massive uptick coming over here, looking good for the food delivery business. And the AMTU, which is the average monthly transacting users, has also seen gone up by at 14.7 million compared to 12.9 million year over year. Now let's shift focus, talk about a slight pain point coming in for these numbers, and that's the quick commerce segment, because GOV has gone up by 24.2%, but it has in fact even done better than our estimates, 3,382 crores. Adjusted revenue has come in at 513 crores as well, so 27.3% uptick coming in over there. However, what's ailing the quick commerce segment is the net loss that has come in, because that has widened on a sequential basis. 317.2 crores compared to 280 crores is what has happened on a sequential basis. Total orders have gone up to 68 million from 42. The the average order value has also gone up to 499 rupees compared to 463 year over year. And active dark stores, they've opened 52 in the quarter that went by, and the total now stands at 609. Lastly, just quickly taking you through to the part to profitability that the management has commented about. They say the food delivery business is already positive on the adjusted EBITDA basis. Quick commerce is still expanding. They expect contribution break even by Q3 FY26, adjusted EBITDA break even by Q2 FY27, and at the consolidated group level, they expect to achieve positive adjusted EBITDA by Q3 FY26.
Well, absolutely. And on that note, tell you what, we also caught up with Karan Taurani, who's the senior VP at Elara Securities, to get his view then on Swiggy's second quarter numbers. Let's go across and listen into what he then had to say.
As far as food segment, again, the profitability is concerned, I think, of course, as they are scaling up and inching closer to the order volume what Zomato would be doing, it's a function of scale as well. And that is why, you are seeing better improved margins. Margins also improving because of better ad revenue, platform fee and other things put together. So clearly, it's an improved signal in terms of the food business. Quick commerce has been a mixed bag. I think on the take rate side, obviously there has been consistent improvement. Growth also has been reasonably good. They've spoken of very strong guidance of doubling the store count as well over the near term. But I think the losses, are significantly high even right now. If you compare this to the larger player like Blinkit, they are operating at largely at a break-even point with a much higher scale and with a much higher store count and a similar kind of a guidance in terms of doubling of store count. So I think quick commerce profitability is going to be the major key execution thing here. And second would be the scale on the food business side. Potentially, how can they grow faster ahead of industry average, and how can they potentially get some market share back from Zomato on the food business side.
Okay, well, so Swiggy is going to be a stock that's going to remain in focus today on the back of their Q2 numbers. But let's shift focus and talk about a couple of stocks that were ailing in yesterday's trade, and the likes of ITC, Godfrey Phillips, the cigarette makers, and aerated beverages stock Varun Beverages. All of these were, seeing some pressure yesterday, and this is on the back of a group of ministers that have recommended a slab of 35% for tobacco and tobacco-related products, aerated drinks under its GST rate rationalization measures. Now, currently, such products, remember, are taxed at 28%. The recommendation is to go as high as 35%. We spoke to Saurabh Agarwal, the tax partner at EY India, and Rajni Sinha, chief economist at Care Edge Group, to understand, is it just revenue? Is it a revenue boon? Is it compliance bane? Or is it just inflationary? What is the impact that's going to be if this recommendation is actually put into practice of 35% GST? It's a new tax slab coming in. Let's go across and listen in.
Maybe for the middle income or a lower income group, there may be some bit of impact on consumption. But when we look at overall holistically for the beverages, I don't think so that from a consumption standpoint, maybe it will be a bit of an impact during a short run. But when you talk about mid to long run, there will not be much of an impact, because the price of the bottle will increase maybe by a 50 paisa or a rupee, which will not impact much on the consumer part.
Going forward, we could see more goods entering the 35% category. So overall, I feel if the idea is to eventually simplify and have lower tax slabs, it's not a good idea to add another tax rate. Now, of course, it has been done from the perspective of improving the revenue, because so far, the economy had been doing well and the GST collection was good. And we also saw, increased compliance and increased efficiency, which ensured that tax to revenue was increasing. But going forward, if things are going to, moderate on the growth front, the government also wants to be ready on what happens to revenue. So probably these steps are being taken from that perspective.
Other than that, right there was the word coming in from experts. But moving on, then let's get you a check on what the outlook then for India looks like for next year. And Bank of America identifies hope and caution for India in 2025. In its latest report, the brokerage firm in fact believes that Nifty may underperform the US in dollar terms and also shares its target for the next year. Somit is standing by with more details. Somit?
Well, Bank of America has come out with this India strategy report where they're giving the outlook for the next calendar year, that is 2025. Now they're saying that India is anywhere between hope and caution for the calendar year 2025, and they're expecting, or in fact they have given the Nifty target for 2025 end at around 26,500. From current levels, it indicates a potential of less than 9%. Now, do remember in 2024, markets have so far given a return of around 12%. So for next calendar year, they're expecting a slower return to come in, at least from the benchmark. However, they're saying that Nifty could underperform the US equities in the dollar terms, and they're saying that the broader market may see even more muted returns given the fact that their valuations continue to remain expensive compared to the larger market. Now they're seeing a potential fiscal and a monetary stimulus and a lighter event calendar, providing some scope for policy reforms as an upside risk to their target of 26,500 for the calendar year 2025. Now they have also listed out 8 factors based on which they have come out with this target for the Nifty. And firstly, they're saying that commodities, capex and credit growth would drive the weak earnings growth for the markets. Apart from that, US trade, immigration, fiscal, geopolitical policies have a significant impact on India and could keep the volatility continue in the market. Apart from that, they're also saying that the capital expenditure for the entire financial year FY25 is expected to miss the street estimates. Apart from this, given the fact that government has come out with more populist measures, there would be more welfare reforms coming in from the government. Also, when it comes to reforms, they are saying that slower reforms would make it much more difficult to justify India's premium valuation at the current stage. They're expecting FII flows to continue to remain weak in the next calendar year also, and they're expecting some moderation in the DII flows for the next calendar year as well. Now, do remember that DII flows have been very strong for 2024, but they're expecting some moderation in the next calendar year. When it comes to positioning, they are saying that across sectors, FI and DI is almost aligned. The market positioning is almost aligned as per BOFA, and this could result into outsized reaction on earnings misses and beats for the next calendar year. And when it comes to valuation, they are saying that despite the 7% correction that we have seen in the benchmark, Nifty continues to trade at expensive valuation on all metrics, and they are saying that further valuation expansion looks unlikely from current levels.
Amit, thanks for taking us through all of those details. On that note, we'll slip into a short break and keep it going with more stock-specific news and updates on the other side.
Welcome back. Thank you so much for staying tuned in. Well, as promised, let's get you a check going on the list of stocks that you should then be watching out for. And Ria is standing by with just that list. Ria, over to you.
Yes, good morning. So let's take a look at the stocks that are going to be in focus today. First up is M&M. Now, the company has clarified on the news that said that Indigo has filed a trademark infringement suit against Mahindra Electric over their 6E branding. Now, the company has said that they had applied for a trademark registration under Class 12 vehicles for the BE6E as a part of its electric origin SUV portfolio. They say that they don't see a conflict as Mahindra's mark is BE6E and not the standalone 6E. They've also said that they are currently engaged in decisions with Indigo to find an amicable solution. So keep an eye on this stock on the back of this news flow coming in. We also have ONGC in focus. Now, the company has increased its stake in its subsidiary called Opal from 94.57% to 95.69% by acquiring rupees 4,906 crores worth of shares. We also have Thyrocare in focus. Now, this company has made another tranche of equity investments of $100,000 US, which is equivalent to rupees 84,090,000 lakhs in Thyrocare Laboratories Tanzania Limited. We also have RVNL in focus. Now, they have received an LOA for the upgradation work of the electric traction system from East Central Railway for an amount of rupees 186.7 crores. There's also United Breweries in focus today. Now, they have launched their premium strong brand called Amstel Grande in West Bengal, which is a significant market for UBL. And lastly, also keep an eye out on Wipro, since Wipro and Netscope have partnered to offer cybersecurity optimization advisory services. So keep an eye on all of these stocks today.
Okay, Riya, thanks so much for taking us through that. While that was a list of all the stocks to watch out for today, there is another basket of stocks to watch out for today, and that's from the defense pack, because in a move to enhance defense preparedness, the Defense Acquisition Council has approved projects worth well over 21,000 crore rupees. Riya, while you're with us, tell us who the key beneficiaries of these could be and which stocks to watch out for on the back of this news flow in today's trade.
Well, absolutely. So yesterday, the Defence Acquisition Council, or the DAC, had approved 5 capital acquisition proposals worth roughly rupees 21,800 crores to augment the defence preparedness of the country. Now, these decisions aim to boost India's military awareness while also advancing the indigenous defence manufacturing ecosystem. If you take a look at the key projects that they have approved, now they have firstly approved the procurement of the water jet fast attack crafts, which accounts for a very significant portion of these approvals. Further, they've also approved the Fast Interceptor Craft, Electronic Warfare Suite or EWS, and next-gen warning radar receivers as well. And they've also approved the advanced light helicopters for surveillance in coastal areas. If you look at the key beneficiaries out of these approvals, we have the likes of HAL, BEL, Bharat Dynamics and Data Patterns, and also shipbuilding stocks such as Cochin Shipyard, Mazagon Dock, GRSE and L&T. So keep an eye on all of these stocks as well.
Okay, thanks, Riya, for that update coming in. Snee, quite the list of beneficiaries that we have there for that mega defense proposal. You do have HAL, Bharat Electronics as well as Bharat Dynamics making it to that list.
Absolutely. You know, we've seen some correction coming in these defense names over the last couple of months, but they have seemed to recover quite smartly. And this proposal that's been put forth by the government, a 21,000 crore investment coming in for defense, seems to be like a big boost coming in, and especially, you know, at a time when things are heating up geopolitically, globally as well. It's always good to have a rather big defense budget. And on that note, it's also going to be interesting to note what this allocation to defense overall is going to be when the budget rolls out in February. So that is going to be something that's going to be keenly watched over, because it's December already. In a short while, all these budget negotiation or rather discussion meetings will also begin, and we'll start getting updates and exclusive stories on what we can expect from the budget as well. But on that note, then let's shift focus, talk about a stock that's been a high flyer and sitting at a fresh record high, and that's HDFC Bank for you. The banking major has also become the third largest company in terms of market cap. Gaurav is joining us with all the details. Gaurav.
Well, yes, HDFC Bank made its record high levels. In fact, it also crossed its 14 lakh crore market cap a few days ago, and after that it is now stabling at around 14 lakh crore market cap. When we talk about market cap, HDFC Bank is now the third largest company in terms of market cap in Indian equities. And let's see what are the triggers which actually help HDFC Bank. So first, let's talk about the MSCI reject that happened in November. When we talk about this reject, HDFC Bank was expected to get around 1.9 billion of equity inflow because of the MSCI reject, and analysts believe that most of it has played out. Other than that, when we talk about bank already has strong fundamentals. We have already seen in second quarter, bank recorded around 10% increase in net interest income. Apart from that, when we talk about HDFC Bank, it is one of the banks who actually increased their unsecured book almost at a CAGR of 15%, which is at the slowest level if we compare it with peers, where they increase their CAGR unsecured book with a CAGR of 20 to 30%. Now, given that there are some risk arising in unsecured book, this is actually a positive sign for HDFC Bank. Other than that, when we talk about some triggers which can come ahead, first is the HDB Financial's IPO. So we know that HDB Financial is one of the subsidiaries for HDFC Bank, where they own around 94% stake, and now they have got an approval for IPO where HDFC Bank will be offloading shares worth 10,000 crore rupees. So that will be another inflow that we may see in HDFC Bank. And apart from that, when we talk about brokerages, we are seeing a very bullish view coming up from all the brokerages. Around 47 brokerages cover this bank, and out of this 47 brokerages, around 40 brokerages have buy rating on HDFC Bank with target price going as high as 2,550 rupees. So all in all, a very bullish trend is coming up from brokerages also when it comes to HDFC Bank. When we talk about stock performance also, we have seen HDFC Bank actually outperforming Nifty, Bank Nifty and also its peers in the last 6 months. So it will be really interesting to see now that the bank has reached its 52-week high, how it will pan out for investor, and let's see if the bank touches 2,000 rupees mark in coming days.
for that update coming in. But on that note, then let's get you some more news and updates from outside the world of stocks. And in a latest development, women training as midwives and nurses in Afghanistan were ordered not to return to classes in the morning. However, no official confirmation has come out from Taliban government's health ministry. It is to be noted that earlier bans closed schools for girls beyond 6th grade and also barred women from universities. Moving on then, Kuwait's foreign minister has arrived in India for an official visit. During his arrival, the MEA has expressed a warm welcome and stated that his visit would further strengthen the relationship between India and Kuwait, and he's also expected to meet Prime Minister Narendra Modi. Later, he will be meeting External Affairs Minister S. Jaishankar as well. Moving on then, Namibia has elected its first female leader, with Nandi Ndaitwah declared the winner of recently concluded election. Now, the result will extend the ruling party's 34-year hold on power. It is to be noted that she's the current vice president of Namibia as well. However, opposition parties have rejected the results after the election was marred by technical problems.
Okay, and shifting focus back home on the politics front, BJP is finally set to elect its legislative party leader at 11:30 a.m. today and stake claim with its Mahayuti allies at 3:30 p.m. in Raj Bhavan. But the suspense continues over the contours of the government, with the Shinde Sena still driving a hard bargain over the Home Minister's post, while also being miffed at increased prominence to Ajit Pawar's NCP. And well, ISRO is all set to launch the Proba 3 mission today at 4:06 p.m. from the Satish Dhawan Space Center in Andhra Pradesh's Sriharikota. This mission will use the PSLV to place satellites into a highly elliptical orbit. It will deploy the European Space Agency's Proba 3.
Other than that, we're completely out of time on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Snehisha, as well as the entire team that put this show together, thank you so much for tuning in. You don't go anywhere because the market takes all of the action forward.
If you like this video, then like, share and subscribe to ET Now.